gosh, look at the crowd.
Come this way.
Those who spread goodness radiate happiness to everyone around them. Introducing LOLC Finance Credit Cards. Fuel the goodness in you.
Welcome to LMDtv. I'm Ashwini Vethakan. Joining us this week on Talking Business is the Director of Legal and Operations at AIA Insurance, Chathuri Munaweera. Welcome to the show, Chathuri. It's good to have you here with us.
Hi, Ashwini, and thank you for inviting me. I'm really glad to be here.
Our first question for you this evening, Chathuri, could you give us an overview of how the insurance sector has performed since 2019?
Sure. I do believe that the insurance industry or insurance sector has performed very well since 2019. Overall, as an industry, it is said to have collected around 209 billion Sri Lanka rupees premium in 2020. And it is said to be having around another 796 billion Sri Lanka rupees as value of assets on their balance sheet. Specific to life insurance industry where I come from, the premium revenues have grown by 16% in 2020 and in 2021 by 21%. And these are, some pretty impressive performance figures, especially in the backdrop of the challenging external environment we are faced with and we continue to be faced with. And it does go to show that the industry itself, be it life, general, or all put together, is an important constituent of the country's economy. I think it would be correct to say that challenges of this period, that came with COVID-19, gave that extra push or the extra impetus that we needed. That was long needed for the insurance industry to, rethink our operating model. The traditional face-to-face sales conversions or the physical paper-based communication methods or customer service models we adopted are no longer possible even now. Adopting digital tools and platforms and really personalizing our reach to our customers, were all hot priorities. We do still have a very long way to go as an industry, but I believe most of the insurers were indeed quite fast to adapt to these changes.
Now, in your opinion, what are the most relevant digital laws insurers need to stay updated about in the context of supporting Digital Sri Lanka?
I would say primarily the Electronic Transactions Act. It has brought in a very strong set of changes to really digitally enable the insurance sector. The Act directly recognizes the legal validity of digital contracts, digital signatures, and really went on to support digital documents to be recognized at courts of laws as well. From the financial sector perspective, the banks were the first movers, really, using these digital platforms and these legal frameworks to enable their services. And insurance sector, I must say, quite humbly, that we were quite lagging behind in adopting these digital changes. I would say mainly was because traditionally insurance was perceived as, or there was the perceived notion that the insurance sales require human intervention and hence best conducted, face to face. But, like everything else, this is a myth that COVID pandemic, well and truly dismantled. And it put insurers in a place that they had no choice really, but to enhance customer experience through digital transformation initiatives. So insurers like AIA, we are not alone, but definitely insurers like AIA, we already recognize these legal trends early. And even before the latest challenges or the COVID challenges, we've had investments in place, we've had the infrastructure in place to digitalize and automate, use artificial intelligence really to transform the entire customer transactions journey from end to end, from closing a sale digitally, using digital point of sale tools, video calls, and obtaining digital signatures, to auto underwriting where possible, where risks are standard, then issuance of electronic documents like policy documents, just end to end, no human interaction. It just goes through, straight through, and other communications, and even finally, even settling the claims and adoption of, the whole process got faster. And this also helped, even for us, definitely in my experience working at AIA, it did help us with fraud control, fraud detection, because there was a good digital footprint of who moved what. So having a legal framework already in place really helped insurers to really accelerate the digital adoption throughout, all of these touch points of the value chain much faster with the COVID onset. And the other important piece of legislation would be the Personal Data Protection Act, which just got approved, as you know, by the Parliament. Um, Actually, as you would know, most of the developed economies have already implemented these data protection laws, like decades ago, maybe. And at least it, or at most, it stops organizations from wrongfully monetizing personal data without customers' consent, and insurers to hold a lot of personal data. So this Personal Data Protection Act is really essential to make sure that the right protection is available for us to make this transformation. Of course, there are challenges. The insurance may face some challenges in implementation because what happens with us as insurers, we have a lot of historical data, long-term contracts, and which are really still kept at very physical form, in physical documentation form for decades. Therefore, it would be really an enormous task for companies to identify data that requires destruction and identify methodologies to deploy to continue with the requirements of adapting personal data protection regulations. And the application of these data security requirements will also be a challenge. But it's all in the right direction. There will be a lot of growing pains, but it is also another piece of digital legislation that insurers have to be kept updated on. So those two I would rate as the most important pieces of legislation.
And on that note, we'll be going in for a short break.
You love the feeling of being renewed. To stay beautiful every single day. To breathe just like we do, because you are truly delicate, protecting the ones who've been with us through the years. With Sayalac Care, the only wood coating that truly protects you. Sayalac Wood Coatings from JAT.
Welcome back as we continue our conversation with the Director of Legal and Operations at AIA Insurance, Chathuri Munaweera. Now, Chathuri insurance penetration in Sri Lanka continues to be low, and given the squeeze on disposable incomes, how are insurers planning to up the ante?
Yeah, yes, insurance penetration levels are low in Sri Lanka. It is measured through what insurers call the gross written premium, or the gross written insurance premium that we collect as a percentage of the country's GDP. For life insurance, the penetration is said to be around 0.5% of the GDP. And in 2020, the total penetration was around 1.39%. So that's all insurance types put together. These are not confidential data. This data is publicly available, and these figures are publicly available. And it shows to us that these percentages are really well below some of the Asian counterparts with penetration, who has penetration levels much higher. There's also a good news part to it. Good news is that it shows us the level of potential we have out there to explore and penetrate. But in order to come up with solutions, we must also understand the various economic or social forces, that has led to low penetration levels. One key factor, as you say, for low penetration in Sri Lanka uh, is the low disposable income level, for sure. But that's not the only one. There are many, and some are like there's low priority towards insurance. It's the last thing in your bucket list. It's the first thing you will take out when things are bad. And there are reasons, societal reasons for this. We have free healthcare systems, which sometimes fall inadequate. There are various government and non-governmental welfare schemes, and we are a society, we still believe, or we are compelled to believe, or we are culturally programmed to believe that we don't need insurance because we can depend on our families. But as most of us know, these social constructs are really, proving to be not tenable anymore. And this then indicates the huge responsibility placed on the industry, the insurance industry, not just on the insurance industry players per se, but on the regulatory framework and even the government to create that level of awareness and offer practical, simple insurance products which addresses, or for regulators and the government to create that awareness so that insurers can create simple insurance products which really addresses different needs of different social groups. That would be a good starting point. When I say products must be simple, then when your income is lower, you buy products which are economical to you. But as that parameter changes, the product structures must be simple to accommodate add-ons or higher coverages, as your life moments change. Other would be to really seek out different customer groups and engaging them so that they realize the need. For example, how do we boost women's access to insurance? It is said that, we all know that in terms of population, there are more women than men in our population. More females come out of the universities or the higher education system. But when you look at the formal workforce, there are more men than women. The percentages are known. It's all out there. But there is that flip side that we see when it comes to seeing women taking part in the economy. But it is also researched evidence that a woman could have at least 8 potential tipping points in their lives where their risks can increase, and for which they need a solution which can be provided by insurance. There's marriage, there's employment, there's purchasing of properties, giving birth, raising children, and thereafter caring for your elderly parents, probably divorce, retirement. All of these life moments can have solutions that come through insurance. And in fact, promoting and understanding women in insurance, women and the insurance market in Sri Lanka is something AIA is particularly focused on under our brand umbrella, which we just launched as Surakina AIA. We undertook a research with the International Finance Corporation of the World Bank Group, the first of its kind in Sri Lanka, on women and insurance in Sri Lanka. And we are in the process of rolling out a long-term program where we would try to reach out different segments of women to educate them on financial risk taking, so they could, their overall life risks can be better taken. And this is an endeavor we've commenced beyond just offering an insurance solution. A lot more to come. You will hear about it in media as we move along on the program. And then there are other strategies of penetration, like what is the easiest distribution channel or easier distribution channels? Is it through the typical agency or the wealth planner model that, as we call it at AIA, or is it more off-the-shelf, digitally available products? What's more important and what's more easier to people? And how do we create that customer experience through digital transformation initiatives? It happened during COVID pandemic, and there's no reason why it cannot continue. So this is an area that insurers need to keep improving and also keep putting investments, but it has to be backed also, not just by the efforts of the insurers, but also by the regulator and by the government, as, like I said, not only an economic need, but also a societal need.
Now, the World Economic Forum has highlighted 6 leadership priorities for boards in the post-pandemic world, one of which is to strengthen preparedness and resilience to crises and systematic shocks. Now, from a sector's perspective, how would this work?
So I do firmly believe, and we've just discussed corporate governance, and I do firmly believe that any company should have a sound governance structure in place and frameworks in place, to support the preparedness of a company to face this type of external challenges. And insurers are no exception. We are the custodians of the risk and the protection that we undertake, and there's a huge responsibility. And as an example, bear with me, I would only speak of AIA, not the other insurers, because I'm not the authority to speak on them. So when you talk about AIA, we, as an organization, we take much comfort by the fact that we have always maintained such solid governance structures. I just explained them to you. We maintain higher capital adequacy ratios in the industry. Our solvency capital is over 4.5 times more than the required regulatory minimum, or over 19 billion Sri Lanka rupees in surplus solvency capital. Obviously, this, what does it provide us? It provides us with balance sheet strength. Then our shareholders maintain over 19 billion Sri Lanka rupees in shareholder equity within the business. This provides us adequate financial strength. We also maintain a long and consistent track record of prudent investments. And this too helps ensure that the quality of our balance sheet is not compromised and is maintained with very high, quality investments. We do have robust processes. We stress test, we scenario analysis, we conduct scenario analysis, and various medium to long-term strategic planning that helps to understand the capital needs of the business, under various stress conditions. And this all helps the company to ensure we have adequate capital held within the business to face such challenging external shocks, and make sure that our policy owners are always well protected on the obligations that we've taken on for them. I just use AIA as an example because I'm closest to it, but I believe you need that level of a robust structure in order to face the type of challenges in the question that you put to me. Obviously led by our board of directors. We do at AIA remain very steady and very resilient in this aspect.
Well, this has been an interesting conversation. Thank you for joining us on the show this evening and for your update into the insurance sector.
Thank you. Thank you for the opportunity, Ashwini.
Coming up, we have the latest from Life on Earth. Stay tuned. Welcome back to the show, and here's the latest updates from Life on Earth. With the pandemic now in its third year, the global employment and social outlook remains uncertain and fragile since the modest labour market recovery lost momentum during the second half of 2021. The ILO, in its report titled World Employment and Social Outlook, or WESO Trends 2022, has downgraded its labour market recovery forecast for this year and projected a continuing major deficit in the number of working hours compared to the pre-pandemic era. Global unemployment is expected to remain above pre-pandemic levels until at least 2023. However, although the effects are being felt in labour markets around the world, a great divergence in recovery patterns is apparent. The European and North American regions are showing encouraging signs, while Southeast Asia, Latin America and the Caribbean have the most negative outlook. Moreover, it can be seen that the labour market recovery is strongest in high-income countries, while lower middle-income economies are faring worse. Examining the impact of the crisis on global and regional trends in employment, unemployment and labour force participation in South Asia, the report states that the change in employment in construction sector is 1.7% from 2010 to 2019. The change of employment in other sectors stood at manufacturing 1.3%, accommodation and food services 0.6%, wholesale and retail 0.5%, mining and utilities 0.1% and agriculture at minus 8.5%. Labour force participation of the employment aged over 15 years in 2021 was 59%, while the estimated labour force participation of the population aged 15 in 2022 was 59.3%. Employment to population ratio in 2021 was 55.4%, while estimated employment to population ratio in 2022 is 55.8%. Meanwhile, the unemployment rate, which was at 6.2% in 2021, is estimated to be 5.9% in 2022. Labour force participation of the female population aged over 15 in 2021 was 46.4%, while the labour force participation rate of male population aged 15 plus during the same period was 71.7%. Of cumulative labour force, a share of 53.4% was wage and salaried workers, while 56.6% were self-employed workers. And that's all the time we have for this week. Don't forget to subscribe to our YouTube channel and follow us on Facebook and Twitter. Thank you for watching and stay safe.